Uh, all right. Welcome to yet another video. Today uh, we are looking at budget cycle and budget structures. You get. We are basically, if you go to the next slide, we are interested in the public budget. We are all very conversant with what a budget is. So, in this instance, we are looking at the public budgets. That means we are looking at the budget for the entire country of Uganda. So, what are we going to look at? One, we're going to look at what is the public budget. Then, two, we shall look at the budget cycle. And then, three, we shall look at the methods of stealing government funds. So, what are we looking at there? We shall be considering the methods through which some officials use to steal public funds. All right, let's get to it directly. So, first of all, what is a budget? What is a budget? So, we say the public budget is the financial planning by government through allocation of resources to achieve the objectives of public policy. We say the public budget plays a key role in the provision of public goods and resources. And then we also say that a budget considers two sides, which include revenue and expenditure. So what are we saying? We are saying that the government will have to plan for the allocation of resources to achieve several objectives. We say objectives of public policy. What are some of these objectives? Maybe they want people to be educated. Maybe they wanted to improve livelihoods of people through operational wealth creation. Maybe they want to provide roads to people. So all those are objectives of public policy. So what the government does, create a budget, and it's through this budget that they'll be in position to allocate the resources. We highlight in the last uh, point there where we say budget considers two sides, which include revenue and expenditure. So when we go to the next slide, we say government revenue comes from the following sources. So we have taxes, we have non-tax revenue (NTR), then we also have debt, and then we also have grants and donations. Then we also have the expenditure side where we say that expenditure is both recurrent and development expenditure. And then we tell you that recurrent expenditure includes items such as salaries and rent and other expenses, whereas development expenditure includes items such as road construction and purchase of motor vehicles. Then we say government expenditure is done through entities referred to as votes, and some of the votes we tell you it could be a ministry, any ministry, say Ministry of Health, Ministry of Works and Transport. It could be a Ministry of Gender. It could be Ministry of Education. Or it could be agencies such as UNRA, could be Uganda Tourism Board, Uganda Wildlife Authority, could be Bank of Uganda, and then public institutions. We have institutions such as Makerere University, Chambogo University, Busitema University. All those are public entities. So what happens? This is the budget. So we say it will look at two sides. So one side is revenue. We have a side of revenue, and then we also have a side of expenditure. Expenditure. So revenue, like we've stated, here we're looking at how the government is going to get money to fund the side. So for the revenue side, or you can call it the income side, we are basically collecting money so as to fund priorities on the other side. So what are the means of revenue collection? I've already stated that the major one is taxes. We've seen various forms of taxes. Then we've talked about NTR. NTR stands for non-tax revenue. Forms of NTR are so many. For example, the tuition paid by public universities, the students, the private students, that's non-tax revenue. There is income from game parks. If let's say you have a gorilla tracking permit, that is a form of non-tax revenue. When you go to get a driving permit, when you go to get a passport, you'll be required to pay some monies. And all that is non-tax revenue, which we are calling NTR. Then we have debt. We borrow, and Uganda borrows quite a lot. So debt, it could be internal, it could be external. So we could borrow domestically from banks. And this can be done through issuance of bonds and treasury bills by government or directly borrowing. At the same time, we could borrow internationally, that is externally, through development partners, one of them IMF, the other we have World Bank. Then the other source is grants and donations. So at the same time, we usually get grants from development partners and from other willing partners. Other countries, they can say, let's give some money to Uganda, and usually they want to implement certain agendas of theirs. So on the expenditure side, we are looking at how this money is being spent, how this money is being. So we collect it here and then we spend it here. So here we usually have ministries. We have agencies. Then we can have public institutions. These words are not so clear. So public institutions, and we also have agencies. So these ones, they are there to spend. And when they're spending, their expenditure is divided into two. So some of the expenditure is either recurrent, and then all it could be development. Or call it capital. How do we differentiate between the two? What happens is recurrent, that means if you see the word recur, that means it's expenditure that is expected to reoccur for each and every year. Case in point is things like salaries. If a company is renting, if a particular entity is renting, it will definitely have to pay things like rent. Then there are normal expenses of utilities, water, electricity, and all things of the like. So that is what we call recurrent expenditure. It differs quite significantly from development expenditure. Development expenditure, we're talking about things like here we said salaries of public servants. Then we look at rent, and then when we also look at utilities. Whereas here we're going to look at things like roads, and then construction projects. And then we shall look at, let's say, motor vehicles. You get. So when you look at the items here and the items here, you realize that in accounting, these are what we call balance sheet items. They are things that are usually referred to as non-current assets in the balance sheet. Whereas here we are looking at things that are often referred to as expenses, and they are income statement items. So what we mean is recurrent expenditure is going to recur. So this year when you pay salaries this year, you pay salaries again next year. Whereas if you construct a road in a particular area this year, next year you'll have to construct it somewhere else. You get? If you build a school here, if you build a block here, next year you may not have to build the same classroom in that particular place. That is how the two differ. So let us go to the next slide here. So after we look at the budget cycle. So the budget cycle, this is the process through which we go through in coming up with a budget. So we say the budget cycle involves 4 major steps, and they include one of them is executive preparation. 2, we have legislative consideration. 3, we have execution. And then 4, we have what we call audit. You get, so those are the 4 major steps, and they usually are reoccurring. You get, they don't stop. Always they are going on. They are always going on. So we have executive preparation, and then we have legislative consideration, we have execution, and then finally we have what we call audit. You get, so it is usually a cycle, like I've stated. It's usually a cycle. How is it a cycle? That means one process will start, and then it will feed into the other, and then it will feed into the other, and then it will also feed into the other. But what happens is these processes are always going on. It's not like one process has to first end and then another goes on. So what happens is, as executive preparation for this year is going on, audit for the previous year is also going on, and then execution for the current year is also going on. So here, executive preparation for the coming year. Then audit for the previous year. Then this word is previous. Audit is for the previous year. Execution for the current year. Then legislative preparation, this one could also be for the coming or the future year. So as one process is going on, even all the other processes are actually going on. So let's go and look at the detail of each and every process, what it actually entails. So one is, the first one is executive preparation. So what is it? Executive preparation is a process through which the executive arm of government prepares the budgets. Spending agencies, which include ministries, departments, and agencies, prepare budgets and ministerial policy statements. So each agency will be required to prepare its own budget. Then they'll also prepare what we call ministerial policy statements. Ministerial policy statements are more or less work plans indicating what an entity plans to do during that year and how much money may be required to be in position to do each and every activity or implement whatever program that they have for that particular year. So the Ministry of Finance, in the next bullet, the Ministry of Finance consolidates the budgets and also considers the revenue side of the budget by making arrangements through which the revenue to fund the budget is going to be generated. So the Ministry of Finance is responsible for, first of all, consolidating the budgets so that they'll get to know how much money will be needed for the following financial year. But then at the same time, they are also responsible for generating the funds that will be required to fund the budget. So it's the Ministry of Finance that is concerned with the revenue side. So first, they're the ones that supervise URA, so they'll consider that during the year, they'll give URA targets that we want you to collect this amount of revenue. Then they'll be the ones to engage all these development partners so as to be in position to source for all the necessary funding. So after the budgets are consolidated by the Ministry of Finance, they are then presented to Parliament for consideration. The budgets are then presented to Parliament for consideration. And this takes us to our next step and our next slide, which we're referring to as legislative consideration. So legislative consideration, we say after preparation by the executive, budgets are presented to the legislature, that is Parliament, for approval. Parliament, through its committees such as Finance Committee, Budget Committee, among others, scrutinize the budgets and meet with heads of various institutions to understand the priorities laid out in the respective budgets. What happens here is Parliament, as you might be aware, it has several committees. Budget Committee, Finance Committee, ICT Committee, Works and Transport Committee. So what happens is these committees usually review these budgets, and then in some cases they'll meet with the officials from these entities so as to understand these particular priorities, and upon there they'll make any changes that could be required. So upon consideration, the budget is passed on the floor of Parliament, approving the presented budgets after the necessary changes have been made. Throughout the financial year, the Ministry of Finance will present supplementary budgets in case other priorities arise that were not budgeted for. So after the budget has been passed, assuming instances such as, let's say, we have COVID-19, so it came and then it was not budgeted for. So what will happen is, before spending, a supplementary budget has to be passed. So the Ministry of Finance will go back to Parliament and present a supplementary budget. So it will tell Parliament that, you see, we have this issue such as we have COVID-19, or maybe there is a disaster here that wasn't budgeted for because we didn't foresee it. So we therefore request that you pass the supplementary budget. So what will happen is the legislature, which is Parliament, through the relevant committees, will still review that supplementary request. And then if they find it sufficient, they will decide to pass the supplementary budget with or without some changes, which takes us to the next step. And the next step is execution. What is execution? Execution is when government agencies spend the funds allocated to them. So execution is basically spending on the budget. You get, it's executing the budget, doing what you were supposed to do. So here we say execution is when government agencies spend the funds allocated to them. And then we say the funds are allocated on a quarterly basis upon cash flow projections by the spending agencies. So there is what we call the secretary to the treasury. The treasury is where the funds of the country are kept. So the secretary is in charge. The treasury is in charge of the funds of the country, and then the secretary to the treasury will be the one to allocate funds to each and every entity, each and every ministry that will require the funds. And these funds will be allocated on a quarterly basis. Quarterly basis, that means each and every after 3 months. So the financial year commences on 1st July of any year. So the first quarter will take the first 3 months of July, August, September. So they will release funds for that quarter. And then after, in October, still they'll release funds for another 3 months. Then in January, they'll release funds for the next 3 months. Then finally in April, they'll release funds for April, May, June to end the financial year. Then each spending agency has an allocated accounting officer who is in charge of the management of the funds of the entity. So each spending agency has what we call an accounting officer. So this accounting officer, in most cases, for ministries, you'll find that the permanent secretary will be the accounting officer. So the accounting officer is the one that is in charge of the accountability of spending and making sure that this particular entities achieves the objectives that they set out to do in their ministerial policy statements and in their respective work plans. Then here we say financial statements showing how the funds have been spent will need to be prepared by the accounting officer at the end of the financial year. So at the end of the financial year, all these entities, the ministries, the departments, and these agencies will prepare financial statements. You get, and these financial statements will indicate how these funds have been utilized. You get, so that is the process of execution. Then the next is the process of audit. So after executing, audit has to take place. So after execution, an audit of the expenditure is done by the Auditor General. So the Auditor General is the one that is in charge of auditing government agencies, government entities. So it's the Auditor General or an official or an audit firm that is approved by the Auditor General. So auditing seeks to find out if the financial statements are true and fair, and if the funds were put to their appropriate use. So the Auditor General will seek to find if, first of all, the books of account were properly prepared. That means financial statements are true and fair, they are free from error and any misstatements. But also, he will seek to find out if the funds were put to their appropriate use. So it will not only stop at presenting trial balances, income statements, balance sheets that are well balanced, but then the auditors will need to go to the field to ensure that the set out priorities were actually achieved. Then several types of audits are carried out by the Auditor General. We say several types of audits are carried out by the Auditor General, and these include, one, we have financial audits. Financial audits are the normal audits that relate to financial statements. So they look for the truth and fairness of the financial statements. Then we look at value for money audits. Value for money, we consider whether value for money was achieved. So we look at for wherever you spent, if there was efficiency, if there was economy, and if there was effectiveness. Efficiency, we are considering if you did what was supposed to be done using the least possible resources. Economy, we look at if you did what was supposed to be done at the least possible cost. And then effectiveness is we consider if you actually implemented whatever needed to be implemented. So the Auditor General also does engineering audits. This one is done on roads and buildings to look at maybe the structural integrity of all those projects. Then the Auditor General also carries out forensic audits. These ones are done to ensure, in case there is rumors or allegations of someone that misappropriated public funds, they'll call the Auditor General to go and carry out a forensic audits. Then the Auditor General also carries out special audits. Special audits are any other audits that are about any special theme. Take, for instance, there was an audit about Bank of Uganda just some years back. So a forensic audit can be about, rather a special audit can be about anything, any assurance that may be required. So after audit, these reports from the Auditor General are presented to Parliament, and then they are reviewed by various accountability committees of Parliament. Some of the common accountability committees, we have PAC, which is the Public Accounts Committee, and then we also have COSASE. COSASE is the Committee on State Enterprises and Statutory Authorities. Committee on Statutory Authorities and State Enterprises. That is the COSASE. So these ones, they review the Auditor General's reports and thereby make recommendations. They usually invite the accounting officers and their teams, and they interface with them to seek explanations to the audit queries that have been raised by the Auditor General. Then next, we look at the means, the methods of stealing government funds. Here we are looking at the means through which officials steal public funds. So we say there are several ways through which corrupt officers get access to public funds for their own individual benefit. And we have majorly 4 methods. They are not conclusive, there are others, but these are the major ones. So 1, we have ghosting, 2, we have bid rigging, 3, we have honest graft, and 4, we have outright theft. So we go through one by one. So what is ghosting? So we say ghosting includes payment for non-existent goods or services. Officers make sure payment is made for non-existent goods and services. Examples include ghost teachers, ghost soldiers, ghost roads, ghost domestic areas, etc. What happens here is the creation of ghosts. You must have heard of it. So budget is created, and when budget is created, they say we shall pay so and so, and then they can say in a district, say Wakiso, we have, let's say, 10,000 teachers. Yet in actual sense, there are 5,000 teachers. So the extra 5,000 teachers that have been created would be ghosts. So what these people will do, they'll create fictitious accounts and send money there. You get? That is a case of ghost teachers. Another case could be things like ghost roads. A ghost road is all a ghost project. A project can be, let's say, in one of the districts, they say we are going to construct a valley dam. So money is appropriated to either construct a valley dam or a borehole in a particular district. So invoices are sent to pay, and payment is made for that particular valley dam, but that valley dam is probably non-existent. So that is a ghost project. Then we also have ghost domestic areas. Domestic areas are what we call payables. What we call in ordinary accounting language, they used to be called creditors. So ghost domestic areas are like ghost creditors. This is where an entity comes and claims that so and so is demanding us. So and so is demanding us. Yet actually some of those payments have already been made. You get, so here they expect that payment will be made to those suppliers that are being fronted as creditors to government, and then there will be a flow of kickbacks between those officials and these particular creditors. Then we see that related to these are double payments where entities pay twice for the supply of the same goods and services. So another method which is similar to ghosting is double payments. This is where someone is paid twice. Let's say it's a teacher, and then for the salary of, let's say, July, they are paid twice. Or someone constructs a borehole, and then they double invoice, and then they are paid twice for the same supply. So it's a means through which government funds are stolen. Then the second one is what we call bid rigging. Bid rigging, we say bid rigging is a procurement tricks where individuals collude and break all, this word is all, and break all bypass. Individuals collude and break all. Bypass procurement laws and award contracts to preferred suppliers expecting kickbacks. What happens here is people awarding contracts to people they know. Let's say someone wants to buy stationery for a particular institution. So what they do, they make sure that the contract is awarded to their colleague, their relative, someone they already know, and usually they inflate the prices. So let's say the stationery is worth, let's say, 3 million. These people will inflate it to 5 million. And later, when the payment is made, the two will share the kickback between the entities. And then we say there is a PPDA Act to guide procurement of public supplies, but is often either bypassed or contravened. So the PPD Act, this is the Public Procurement and Disposal of Assets Act. So it's there to guide procurement of public supplies, but is often either bypassed or contravened. So this PPD Act is supposed to guide on the process of procurement. Some of its principles are transparency, it encourages competition, you get, so that each and everyone has a chance to compete in the provision of public goods and services. But it's often either bypassed or contravened, and then usually people get contracts and then they share these kickbacks. Then the next means through which government funds are stolen is what we call honest grafts. What is honest grafts? We say this is a means through which an employee of government uses advance information to produce private benefit. Then we have an example here. For example, an employee of UNRWA may have information that a road will be constructed in a given area and he decides to purchase land in that area so as to later sell it to government. So honest graft is, that's why there's a word honest, because it even may be very hard to prove. So for instance, if I have information, so I know that government will construct a road passing through my district of, let's say, Wakiso, and since I may be an engineer, I may know exactly where this road is going to pass. So what will I do? I'll go and make sure to buy land in that particular area where the road is going to pass. So when government later comes in to construct the road, they'll have to compensate me money. And what will I do? I'll inflate the prices of the land. For me, I'll say for me, I want a higher amount compared to the cost price of the land. So honest graft, you're using information you got as a result of doing your job, and you're using it to generate private benefits. You get, so that is a means through which government funds are stolen and they're accessed. Then finally, the other method that is often used to steal public funds is outright theft. Outright theft, as you can see the word, it's outright, so it's straight theft. So we say outright theft is a means through which officials outrightly steal government funds. And we say this is done through fraudulent practices such as forging accountability. So one of them is forging accountability, non-provision of accountability, etc., among other means. So one of them is forging accountability, the other is non-provision of accountability. Then we say some officials sell off government assets such as cars and and land. So the final method that we have is outright theft. So someone actually steals the government funds. So either they forge accountability, they play around with bank statements, they steal funds and find all fraudulent means to hide this stealing. You get, so let's say they can raise a requisition and say we want to purchase this and this and this, and they actually do not buy whatever there is to buy, and then they go and they forge accountability. So they go look for receipts everywhere, they forge them, they forge signatures, and they present it as accountability for the funds. You get, so that is what we are referring to as outright theft. Then you've heard of cases where government assets, some can be vehicles, others can be land, where people go and then they sell off land. They sell them off to either themselves or other individuals, and then they gain benefit as a result. So it's also another means of outright theft, and that brings us towards the end of the class. So about budgets, in case you're interested in information about budgets, there is where you can go and see each and every budget of Uganda. So there is a website. You're seeing what is there. It's called budget.go.ug. That is the address. You're seeing it there. Budget.go.ug. So if you go there, it will give you information about the budget, all the information about the budgets. It looks at the process, budget data, budget library. Then it's literally telling you that you should be in position to know your budget. So it has all entities. You get, so it has view your local government. So local government, which district do you come from? Do you want to see your budget? Let's say you come from Arua district or Arua city, and then you want to know your budget. So you're going to see it's going to bring us a highlight of Arua district. It's just delaying. I think my internet is a bit slow. But what happens with that website is when you go there, you can access all information about the budget. The internet here is a bit slow. Let me choose a ministry, for example. So I can say maybe I want Ministry of which one? Ministry of Health. So when I put in Ministry of Health, it has come. So the Ministry of Health has an approved budget of, so it was there is a K at the end. So this was 1,271,705,302,000. You get. So then they break it down. So part of it is preventive and curative medical supplies, including immunization, then hospital construction, monitoring and supervision, support to local governments, then purchase of specialized equipment, then purchase of office and IT software. Then you see, so all these items are there. Then they break it down. They break it down. Clinical services, if you want the actual figure, they are all there and can be accessed. Then on the left here, do you want us talking about the ministerial policy statements? You can always, you just click it, you can view it. So they tell you major achievements, medium plans. They give you all the all the information. There we're looking at the ministerial policy statement. Then you may want the approved budget. So this is the approved budget. Should you want the approved budget? Depending on the year that you want, so you can say, for my case, I want 2020, 2021. So you go and say you want the approved budget. So it will bring you approved estimates for the year. So remember, I was telling you about recurrent and then development. So you can see recurrent budget estimates. They list them there. That is a summary. Then they also put development budget estimates. You can see the nature. So they say support to Ministry of Health, support to Mulagori Hospital rehabilitation. This is a construction, rehabilitation and construction of general hospitals. That's a construction of specialized neonatal and maternal unit in Mulago Hospital, renovation and equipping of Kayunga and Yumbe General Hospitals. So you can see all the development expenditure is in the form of constructions. You get? So that is in case you want Ministry of Health, that is where you go. So should you want any information about the budget of Uganda, so you go to that particular website. So you just type in budget.go.ug and then you'll have all the necessary information in relation to the budget of Uganda. So this brings us to the end of our class. Be sure to meet again.